Hello, and you're welcome to Global Business Insights, where you get more on the main business headlines across the globe. Starting with earnings, Target's first quarter fiscal earnings missed estimates as weak demand continues to hurt revenue growth. Target shares down 7.5% as we speak. Even as we've got a mixed day so far on Wall Street, all eyes, of course, are on Nvidia, perhaps the most important stock on the S&P 500 if you measure by impact on valuations. Nvidia reports after the bell, and the bar may have been set just too high, with Q1 sales expected to jump 242% to $24.59 billion and earnings forecasted at $5.8 a share. The stock is already up 93% this year and has driven 1/4 of S&P 500 gains. Nvidia has deep competitive advantage in the AI space, both in hardware and software, and we'll hope things stay that way. Earlier, we got UK inflation for April at 2.3%, close to the Bank of England target, but still missing 2.1% expected. We thought earlier in the morning that this would, of course, imply that rate cuts are going to be coming in June. But markets are taking a different view, looking more at the stickiness of services inflation and the fact that the 2.3% was higher than expected. Services inflation was at about 6%, almost the same level as we saw in March, and markets are concluding not good enough, seeing the higher than expected inflation as thwarting chances of a June rate cut. We will discuss why we think this remains a very close one. June becomes an interesting month in which we could be seeing a decoupling between Europe, UK, and US on monetary policy. The core risk, definitely for Europe, is that monetary policy stays too tight and undermines a necessary recovery of demand towards the pre-pandemic trend. And BHP has come up with a third 49 billion bid, which, though rejected, has led to talks starting between Anglo and BHP and an extension of when offers can be revised. BHP confirmed the new offer, which it described as final, but noted it would be willing to increase if Anglo's board agreed to recommend a higher bid or if Anglo received an offer from someone else. In the latest offer, BHP still wants Anglo to first spin off majority stakes in South African platinum and iron ore companies. And no surprises, China has signaled it's ready to unleash tariffs as high as 25% on imported cars with large engines as trade tensions escalate with the US and European Union. US Trade Representative Office today also clarified that some of the steep US tariff increases on electric vehicles and their batteries, computer chips, and medical products will take effect beginning from August the 1st this year. And Nigeria's foreign reserves saw a marginal increase over the past month, rising by $520 million to reach $32.6 billion. And we'll also replay our clip on the Monetary Policy Committee meeting that held yesterday, where we saw interest rates hiked. As markets digested UK inflation data, focus has been on the sticky services inflation print, which did not change and was well below expectation, even though headline CPI dropped to the lowest print since 2021. Analysts say sticky services inflation, seen as the most important driver of inflation, implies a delay to monetary policy easing, but that will again depend on the May CPI data. But the May inflation read is due on June 19th, where we expect to get a further improvement, but just a day before the next Bank of England meeting on June the 20th. This could go down to the wire, while some analysts could still see a delay to later in the summer, in the August 1st meeting. The pound was slightly up against the dollar, but not materially, which suggests that chances of a June rate cut could still be around that previous 50% level. Below is a recap of the chart earlier played this morning. There were expectations that today's CPI print in the UK will be the make or break factor for a June 20th meeting interest rate cut by the Bank of England, and also fueling intense volatility around the pound sterling. The data just came out. 2.3% is close to Bank of England's target year on year for April, but higher than expectations to see CPI up by 2.1%, which would have been a sharp drop from the March 3.2% rise, and also the lowest CPI print we've seen so far since July 2021, also quite close to the Bank of England's 2% target. Core CPI also came in at 3.9%. Core CPI inflation was expected to show a sharp slowdown to 3.6% year on year in April from 4.2% in March, while monthly CPI was 0.3% compared to 0.2% expected and 0.6% in the prior month. The release showed that falling gas and electricity prices resulted in the largest downward contributions to the monthly change in headline inflation and the annual rates, while the largest partially offsetting upward contribution came from motor fuels, with prices rising this year but falling a year ago. Household and household services prices fell by 0.1% between March and April 2024, compared with the monthly rise of 1.0% a year ago. Ahead of the print, analysts saw sharp deceleration in UK inflation due to a drop in energy prices on the back of another 13% decline in Ofgem's energy price cap. The ONS, that's Office of National Statistics, reported that year-on-year services price growth was 5.9% in April, just below the 6% reading for March. However, that was well above the 5.5% rate of services price inflation that had been predicted by analysts. Money markets were seeing over 50% chance that the Bank of England will begin to cut rates from next month's meeting. I think the odds would have improved from today's print, given the evident momentum of the downward trend in prices. Of course, if we had got hotter than expected inflation data, that would have provided more pressure, upward pressure on the pound sterling, with the pound to dollar already going towards that 1.28 level. But this, I think, came closer to what we were expecting. Nigeria's foreign reserves saw a marginal increase over the past month, rising by $520 million to reach a $32.6 billion level, according to the latest figures. The reserves, which stood at $32.1 billion in April 17th, have steadily climbed to $32.6 billion by May 16, also reflecting improved foreign exchange earnings. Here is a replay on the clip on the Nigerian Monetary Policy Committee meeting, which held yesterday.
The committee's decisions are as follows. 1. Raise the MPR by 150 basis points to 26.25% from 24.75%. 2. Retain the asymmetric corridor around the MPR to plus 100 to minus 300 basis points. 3. Retain the cash reserve ratio of deposit money banks at 45%. And 4. Retain the liquidity ratio at 30%. Considerations. The key focus of the MPC at this meeting remained to achieve price stability by effectively using tools available to the monetary authority to rein in inflation. Members observed that while year-on-year headline inflation in April 2024 rose moderately, the month-on-month measures of headline, food, and core all declined significantly. This follows a decline month-on-month of headline and food measures in March 2024, suggesting that the recent tight monetary policy stance of the bank is beginning to yield the desired outcomes. The MPC, however, noted that the inflationary pressure continues to be driven largely by food inflation. The committee thus reiterated several challenges confronting the effective moderation of food inflation, to include rising costs of transportation of farm produce, infrastructure-related constraints along the line of distribution network, security challenges in some food-producing areas, and exchange rate pass-through to domestic prices for imported food items.
The lower 150 basis points hike than last meeting's 200 basis points was as expected, given a trend of abating monthly inflation, which pointed at the need to hike not as much as in the previous decision, while cementing the defeat of inflation, which still looks a bit stubborn, and noting that the bulk of the inflationary factors affecting food prices are not demand-driven. The central bank governor, Dr. Cardoso, in his characteristic shorter speeches than his predecessor, came across as relaxed, and the gains in price stability and in confidence from markets on monetary policy management must be reassuring. Also, as expected, the governor took several victory laps on lower monthly inflation growth over 2 periods and underplayed marginal increase in reserves, and noting that the bank needed to address reserve accretion. In answering questions on investors, he said the mood remains positive and players are exercising free entry and exit as expected in any economy. On inflation, he urged the government to look at the non-monetary challenges impacting the food supply chain, especially security issues and infrastructure constraints. Little was said on the foreign exchange rate stability and less clarity on the future rate hike trajectory or longer-term economic parameters. The mood had been set to slow down rate hikes as inflation abates, but no confirmation of when could get inflation peaking and when rates increases could stop and when rate cuts could be expected. The challenge one tends to have with our Monetary Policy Committee briefings is lack of enough forward guidance, in my view, and thinness on data such as summary of economic projections over the next 2 to 3 years to help investors plan. This could be done through surveys of MPC members and leveraging the extensive central bank analytics. The speech also came across as tactical, always optimistic, and not questioning issues like tepid economic growth, high poverty, and not a whisper on key issues like the unemployment trajectory, suggesting, in my view, that the CBN is either limited in its data set or less concerned on job creation and other important people factors. Still, it was good news in the sense that inflation is going down on a month-by-month basis, and banks are in good shape. Looking at European stocks, they were lower as regional markets continue to digest the inflation outlook and trajectory of interest rates. First, looking at African stocks, the Nigerian Stock Exchange All-Share Index down 0.16%. Johannesburg Stock Exchange All-Share Index also down 0.4%. Of course, these markets are now closed. FTSE 100 also closed down 0.57%. DAX down 0.24%. CAC 40 also down 0.61%. Wall Street looks mixed as markets brace up for Nvidia's earnings later today, expected to be one of the most consequential announcements for investors. Well, that's it from me on Global Business Insights. This is Bode Oshosami. Please share, kindly follow on Facebook and LinkedIn, subscribe on YouTube and X. Thank you very much for watching and following. Bye-bye.